Hello and welcome everyone. Thank you for joining today's webinar, Crafting the Digital Experience for the Short-Term Investor. My name is William Ferrand and I will be your host for today's presentation. So before we begin, I'd like to just cover a few housekeeping items. We'd like this to be interactive, so at the bottom of your audience console, there are quite a few application widgets you can use. If you have any questions during the webcast, you can click on the Q&A widget and submit your question. We'll probably allow a bit of time at the end of the webinar for questions to go through many of them as possible. So don't be shy and do ask as many questions as possible through the webinar. Finally, we'll also be sending the recording of the webcast as well as a copy of today's slide deck following the presentation. So please stay tuned and you'll receive these afterwards. So I'm very fortunate today to be joined by three experts in online trading in Catherine St. John, David Jones, and Guilhem Tranchant. I'm really excited as they actually all have slightly different roles and backgrounds, so I'm sure we're going to get some pretty different perspectives across the board. Catherine has in-depth knowledge of software development, quantum analytics, and trading user experience amassed through startup days with Recognia. Her team continually transforms Trading Central's products to deliver modern, engaging experiences and helps brokers envision how to deliver actionable insights to their customers. David is a qualified technical analyst whose major role is to develop Capitalcom's market-leading content through driving their YouTube channel, where he delivers info-reaching videos, webinars, technical analyses, and key market updates. He started his financial career in the 1990s as a currency analyst. He's held senior management positions at CMC Markets and IG Group, where he provided regular commentary to media and clients and devised a wide range of educational programs. From 2015, David was markets presenter on BBC Radio 5 Live's Wake Up to the Money. He's also consulted within the financial trading industry, providing education and market content for a wide range of clients around the world. And last but not least, Guilhem joined Capitalcom UK back in August 2020 and will lead the development of both their UK business and the Western European countries. He started his career in 2007 at BNP Paribas CIB in London as an EMTN trader. Then he joined Saxo Bank in Paris in 2010 as a cross-asset sales trader before managing his own team handling both acquisition and retention activities. He became the head of sales for CMC Markets France back in November 2014 before handling all country manager duties back in September 2015. He gained a real expertise on sales and relationship management activities and has an in-depth knowledge and understanding of all marketing, regulatory and compliance activities closely related to CFD trading and spread betting. So in this session, we're going to start with David, who will give us his expert lens on what's been going on so far in the markets this year. Crazy day yesterday as well as a view of what is to come in 2021. We'll then move into more of a discussion, I guess, between Guilhem and Catherine, who are going to discuss how trading's evolved, what they've seen in terms of behaviors and new entrants into the markets, especially with everything that's happened this year, and talk through how to engage these new investors, what they've seen, and looking at both client acquisition and client retention. But before we start, maybe it's better for the guests to introduce their companies in a little more detail. So Catherine, shall we start with you and give us a little bit more information on Trading Central?
Oh, sure, yes. So thanks for the introduction. You've already read the bios. I started with Trading Central, maybe in spirit, back in, I think 2003 was my first customer in the industry, E-Trade in Canada. And it was interesting hearing about the backgrounds from both of the other speakers on the call, because I've worked with many of those firms. But Trading Central provides research and embeddable apps and analytical insights to many online brokers. So my background with the company started programming automated chart patterns way back. And since then, that company I worked for was acquired by Trading Central. I think it was 2016. And our product portfolio has expanded dramatically. So not only looking at automating or having, analyst desks around the globe covering technical analysis, but now operating in the space of news analytics and sentiment, and that's where we work with Refinitiv, actually, and then into other areas like our economic insight product line and fundamental insight coming soon. So it's just really great to be on the line with people working with all these great brands that Trading Central has actually served through the years.
Thanks a lot, Catherine. And yeah, really interesting stuff and great to have your expertise on the line. And Guillaume, do you want to give us a quick overview of Capital.com?
Yes, of course. Thanks for the introduction, Will. Hello to everybody. So originally, the adventure started with Currency.com back in 2017. Currency.com is a tokenized trading platform. Then Capital.com has been created first with a license in Belarus with the Belarusian regulator, NBRB. And then we expanded worldwide, mainly across Europe as a first step. We got CySec license in Cyprus, and then more recently we got our FCA license back in 2018 in order to develop the business in the UK on both spread betting and CFD trading activities. So as I just mentioned, Capital.com is an online broker giving access to more than 3,000 markets through one single vehicle, a CFD, contract for difference. We give access to different underlyings, among them FX market, indices, stocks, commodities, and cryptocurrencies. As far as I'm concerned, I recently joined Capital.com in order to be the new MD of the UK to develop the business in the UK locally and in Ireland, but also in Western European countries. So we started operation under the FCA license back in August 2019, and our spread betting activity has been launched quite recently back in May 2020. We have known a significant growth in Western Europe and Asia, mainly worldwide, apart from the US due to tax reasons. Mainly. And I can say that AI is at the center of our technical achievements because we developed an AI system analyzing clients' trading behaviors in order to identify trading bias, to help clients identifying potential trends on the market and ultimately to take better decisions and to trade better. So this is a quick recap of what we're doing and who we are.
Thanks a lot. Yeah, fascinating. And I'm sure
we've got a little bit in common in terms of leveraging AI. So that's kind of interesting too, just applying in different areas.
Yeah, definitely. I think it's something we'll definitely be talking about in a bit. And David, it would be great to get, your perspectives on what has been a pretty crazy year in the markets. So yeah, what have you seen from your sort of expert eye?
Yeah, sure. We'll do a quick roundup of what the year has been so far. And it's been an incredible year. I think anybody who watches markets knows how unprecedented this has been. Even for those of us who worked during the financial crisis, it was like the financial crisis on fast forward this year in terms of how markets were moving in both directions. It started, I suppose, fairly mildly this year. There was the US attack on Iran, on the senior general there, which seems like an awful long way away now. That was the big news at the beginning of the year. But markets sort of shrug it off, and it was really late February that we saw the coronavirus panic started hitting global markets in late February 2020. And it was a panic. We saw everything dumped, whatever it was, stocks, gold, riskier currencies, all this sort of stuff. Investors just headed for the exits when it came to risk. We'll have a quick look at the chart in a second, but the S&P 500, so the broader US benchmark stock index, fell 35% in less than a month. And I think plenty of us in the eye of the storm thought, well, this could well be just the start, because markets don't fall 35% in a month and then recover almost as quickly. Little did we know. We saw the pound as well, because again, anything but the US dollar was viewed as a risky asset. So the pound hit its lowest against the dollar since 1985. So we were back to like a 35-year low for the pound against the dollar. So a pound bought $1.14 at its worst point this year. And I think perhaps the thing that portrays it the best, even people who weren't interested in markets, I think were aware of this next point, because I had plenty of people contacting me saying, I don't really understand this, and they'd had no interest in markets whatsoever. But in April, the contract for oil for May delivery went negative. So for those of us who think, well, a market can only ever go to zero, we had a somewhat rude awakening in April, where oil traded at about minus $36 a barrel. So in effect, the oil producers were paying you to take oil off them. And it was a bit of a peculiarity. It was an oversupply due to lack of demand because of the virus and lack of storage facilities. But we actually saw oil go negative. So it was just the most incredible year. And if I can just quickly share my screen here, if this works, just to pick up on that stock market fall. I think you should be able to see that. I think is that showing? Can you see that, Will? Is that coming up? Maybe not.
No.
No? All right. No, all right. I'll skip that.
There we go. There.
Oh, there we go. Perfect. It's okay. It's appeared as a little window for me, a slight lag. So I thought that we'd have a look at just the S&P, just to see that the size of the drama really in February, and the size of the fall. You know, if we went back to the end of 2018, there was quite steep falls in stock markets then. I think spooked by perhaps worries that the technology stocks had got overvalued, and that was quite a scary fall the last quarter of 2018. But it had absolutely nothing on the size of the move we saw in stock markets this year. You know, so the US stock markets knocked back to where they were 3 years ago in about 3 weeks. So yeah, 3 years. So a newspaper headline: 3 years worth of gains given up in 3 weeks. So some really dramatic moves there. So that was the plunge part of 2020. Then of course we had the recovery, which was equally as shocking, I think. So we saw sort of obviously lockdowns by various governments around the world, lots of support such as furlough, and then central banks wading in, bringing interest rates down. The net result is we saw these markets bounce back. So the Nasdaq hit fresh all-time highs in June, so to levels never seen before. S&P 500 hit fresh all-time highs in September. Gold hit all-time highs in August, trading up to $2,075 an ounce. Euro hit a 2-year high against the dollar in August, and even Bitcoin, the crazy market that is Bitcoin, hit 2-year highs in November. So an absolutely incredible year. Lots of extremes hit in both directions, and really I think investors taking the view that perhaps the pessimism was overdone, that the support from the government and central banks would help save the economy, and an incredible performance led by a lot of tech stocks. Obviously, I mean, clearly, the lockdown was something of a gift to the likes of Amazon in particular, home delivery, Netflix, people sitting at home and watching stuff. Even Tesla, I think in April, was the #1 car sales figures in the UK, because nobody could go out and buy anything else, but you could, of course, buy your Tesla online. So online businesses really flourished. Then we've had the yesterday's news, just briefly, that the vaccine, just to cover that, I mean, that was done before, that arrived slightly after I finished the presentation. And it's quite interesting, again, if I just share my screen, I mean, the markets, again, went ballistic, as you'd expect, based on the news about the vaccine. So I'll bring it up now, so you'll see eventually when it appears, you'll see this quite a strange looking move for yesterday. But we saw the announcement was made, or the vaccine news came out, I think it was about 11:30 UK time yesterday in the morning. This is the S&P 500 again yesterday, the broader US stock market, and it hit fresh all-time highs on this news yesterday. What's interesting, after that surge, we're now trading on the US stock market back to where we were at the end of last week. So it's quite interesting that we've had this vaccine for the virus, and the market got very excited about it, but those gains were given up quite quickly. So it does make me wonder that perhaps we're in for some tougher times ahead. So we'll see what happens. So looking ahead to next year, I mean, at the moment, stock markets are still strong. All-time highs for the S&P yesterday. I think Corona, the virus, has still got the potential to surprise economies. We have this virus. It is very much early days. The way that some of the media is talking, it makes it sound like everyone's going to have a vaccine by Christmas. I can't quite believe that. So I think maybe, we're getting a bit ahead of ourselves with the vaccine. Let's see what happens. I think the bigger question, well, not the bigger question, but as equal to the virus is President Biden. What's that going to mean for markets in 2021? If we do see economies still in trouble, is Biden going to spend more to try and support economies, to help out US taxpayers, maybe, do more clearly than the current administration has done in some people's eyes? So would that have pressure on the US dollar? And of course, here in the UK, we've got Brexit. So that's another factor with the potential to bring volatility. So I think it has been a crazy year, and I think it's brought in lots of new traders. I've seen this from the stuff that we do on Capital with YouTube. I'm sure we've seen it in terms of account openings. I think when markets go crazy, it sparks interest in people who've never got involved with markets before, which I don't think is a good thing from their point of view financially, because the chances are they're going to be completely unprepared for how markets move. But in terms of our industry, I think it really helps raise awareness of market volatility and financial markets in general amongst the wider public. So I think we've had a fairly quiet couple of months recently after the excitement in March and then the bounce back. And I think maybe now we'll have a bit more of an exciting end to the year and hopefully more volatility in 2021. I think the factors are certainly out there, but I think for plenty of people, it's been an absolute, for me, I've been doing this for 20 years. It's been a year like no other. So I don't think 2021 is going to match it in terms of volatility, but I think we've still got some interesting times ahead.
Yeah. Thanks, David. Definitely.
David, can I just jump in for 1 second? I love that you brought up oil. Because
yeah.
I just pulled up right now an old screenshot from Robin Track. So, we used to be able to see the engagement levels of Robinhood users in the U.S. and just the number of holdings, the number of positions in the United States oil fund around that time was just absolutely an astonishing chart to look at. Different chart, right? Engagement levels versus versus
I think
the
people were buying
chart.
all the way down. People were buying all the way down to zero, thinking, well, it can't go any lower. Then, of course, it's a massive shock if you've bought a barrel of oil at 10 cents, for example, to wake up the next day and find it's minus $30 against you. Very peculiar times.
Well, I mean, what a great opportunity for people working in education like you are. I know a lot of our clients saw something like a 6 times uptick in engagement levels with their educational resources. So they've been investing a lot in education. And I mean, that's where we come in. And for the clients that we serve, we're pointing out how we're even further expanding the educational component of the apps that we offer. So a lot of the apps that we offer, as you're going in and looking at a chart and seeing some of our technical analysis or looking at some of our news analytics, it's always like, you can't hide from the education, from the nudge that we're trying to give on, expanding the information that you have. So,
yeah, I think it's fascinating. You sort of touched on the education side there, Catherine, and David touched on the new entrants to the market. I guess, Guillaume or Catherine, it'd be good to understand, what are the changes you've seen across the board in terms of who are the new types of investors that are coming in? What are their sort of appetites? And try to understand how that sort of fits in with the evolution of online trading.
Well, I think just like with politics. Oh, sorry. Go ahead, Graham.
No. Please go ahead, Catherine. I will do my part just afterwards. Don't worry.
Oh, yeah, sure. No, I would say just like with politics, kind of the name of the game is diversity. I mean, it's one of the interesting things about creating software applications these days is how do you help address such diverse interests? And, we're a global business as well, just like, David and Guillaume on the call. So you're really serving a range of different experience levels now, as well as interests. And so we really try to jump off of people's interests, and that's how we find that we can, call it boost our adoption of different products that we offer. So, for example, it used to be that trading was such a niche. It was such a, people who were interested and had an aptitude to find out how to download the software and get direct market access. I mean, they were so engaged that, you could just put your tool there and they're going to find it and use it. And really now it's about how do you jump off of where they're already paying attention? If they're looking up U.S. oil fund, then how do we move them from their interest in U.S. oil fund to be able to understand the situation better, maybe with a technical overview, maybe with helping provide some sentiment and, top topics on the headlines, but then help move that over to some action that they can take. And so that's where we're, we've had, call it insightful analytical tools for many years, and we're expanding those out. And I know our news analytics line, what we call TC Market Buzz, that's one of our latest innovations, I would say. And it's part of our strategy to help pick up on what are people searching on, what are people looking for, rather than trying to retrain them to move over here for education or for tools.
Yeah, I agree with Catherine here. Basically, I think that 2020 has been a game changer in terms of investment mentalities and new clients coming through. So basically, in the past, clients were more long-term investors, usually on stocks or some kind of similar products and contracts. And basically, now people are more interested by financial markets, all of the economic situations or news like the pandemic and the impact on the markets, all of the correlations between all of these informations. We have seen a younger audience too. Maybe because of the millennials generation, more keen on new technologies and financial markets. We have seen also more educated traders. Before, we had many inexperienced traders, newbies coming to the markets because they've seen some ads on different websites, and now they want to get more educational contents. They want to get more training. They want to get more research and market analysis. They're really interested into what they're doing, not just gambling on if that market or that market will go up or down. So I think that this year has been really a game changer within the industry. In terms of assets traded, in the past, FX market was showing really huge volumes. Now it's more about stocks, cryptos, and commodities because of all contents and everything going on these markets. Also, we've known like big IPOs and big names, like, for example, Tesla. People know about these stocks and they want to trade these stocks because they're maybe users of electric cars or softwares, so they know what they're doing, they know about the companies, and they want to invest on this on a short-term basis. So this is more the change about experience, age, assets traded, and the way people trade on the account. They want to get more educated and they want to get more qualitative and professional market analysis and research before taking their decisions. So these are the main change I think we've seen in 2020, yes.
And I guess, how do you go about sort of bringing those people on? Sort of, we talk about client acquisition, but enticing people and showing something differentiating, because being a millennial myself, we're sort of notoriously fickle, and we'll just sort of jump around a bit. So how do you go about sort of enticing these new traders in?
On our side, and I think... Sorry, Catherine, please go ahead.
Yours.
Okay. I think our business is really linked to trading centrals, but we give access to products. We're an online broker, not a research company. But basically, there are two sides which are really mandatory for us, really important. So first, acquisition. Acquisition is really important because we still see a high churn rate where people come, put money on the account, and then trade, make bad decisions, lose money, and just stop. So we have to to always find new ways to push on acquisition metrics and keep our new clients coming in. There are still area for growth, even if we're in a maturing market compared to the past years, but still a high potential for newcomers and switchers wishing to trade with another broker, maybe with additional tools, additional services they offer. And digital has been the key here. We are working on many channels, but mainly it will be about SEO, ASO on mobile apps, and also usual banner displays. So these are the main channels for acquisition, and also social medias. I think that it started back in 2017, 2018, but 2020 has been the year of growth in terms of feeds on social medias, mainly Twitters for acquisition. So this is the first part, and then also we have to work on retention. We have to make our clients trade better. We have to educate more our clients. We have to give them access to more trading tools. And these are the two parts we are working on. And I think they are as important, and this is something we're doing on a daily basis. So it could be about more trading tools, it could be about more products to trade, it could be about more better execution with more advanced kind of orders, new platforms, for example MT4 automated trading. MT4 is a very used platform worldwide, and this is the kind of thing we will give access to in order to grow our client base and give more trading tools to our clients. So yeah, these are linked to many actions we're doing on a daily basis. But for us, acquisition is as important as retention.
Thank you. And Catherine, I guess when we talked before, I remember we had a quick chat about, you from a user experience point of view, not overwhelming people, but then sort of drip feeding them more information. How does it sort of fit in with how you guys are looking at things?
Yeah, I mean, I like to think of everything as a progression. So, it's interesting because I used to work predominantly in the areas of you're already in an online brokerage platform. How do we leverage your attention and your workflow to best help you and place insights in the moments that matter, that help someone? And so that continues to be a strong area of focus of my UX team. But right now we're sort of blended more into acquisition as well. Is how do we help people compress the services they're offering, align the services that they're licensing from Trading Central to offer value both in acquisition and in engaging and retaining their clients. So for example, several of our products have a freemium version. So when we talk about people interested in looking up oil fund or Tesla or whatever, we want to help capture those online searches, capture their attention. And, we can do that if we're offering, let's say, some topical news or charting freely available through our brands. But then so inviting to capture their attention in that moment and get some face time with our brand, and then invite them to move further into opening an account where they can get real premium analytics. So analytics and sort of that depth of behind those analytics that are going to help satisfy that sort of intellectual appetite that Guillaume was saying that people are having today, right? I think it was really interesting to see that you have a lot of new simple mobile apps launching, like a Stash or a Robinhood or a Bucks or something like that. And they're really helping us to expand the market, which is amazing. I mean, the more engaged retail investors are with trading, the more everyone wins, including the consumer. But what happened was, as soon as zero commissions went more broadly available in the US, for example, you had people actually transition their accounts from those simple apps that got them into the market, because now they've matured a little bit. They're maybe 2 years in and they want more. And so it's interesting to see that, even some more of the rich, I don't want to say the word complex sites that have a lot of data and information, that's actually what people want. And so now we're looking to help those brokers with sort of their newer mobile app experience to think about, like, how do you bring on these rich analytical tools that are going to satisfy and retain your clients, while sort of honoring the new way that people expect to consume information, which isn't just like throw all the tools out there, but being a lot more thoughtful around you, helping people move from a news topic to looking at an actual tradable asset on a chart, helping them move from a chart to maybe some levels in an order ticket. I remember working on a very simple project with someone around just that, helping people look up news and topics in our Buzz product that were engaging them, and help identify the entities, the financial instruments that they could trade related to those topics that they're looking up, and then moving them there for more of a directional view and some levels that they could use when crafting an order. And moving through that process, they were seeing something like a 10 to 15% conversion rate. Now I'm quoting conversion rate because I can't remember exactly what they were measuring. But to me, that's the kind of like thoughtful, progressive experience. We can kind of hook things together in a way that honors how people are searching and using their apps today.
And when David was speaking earlier, you sort of jumped on the AI side of things. I guess in terms of moving that experience, does the AI sort of play quite an important role in that? In sort of, when you're talking about a news topic and sort of guiding them to the instruments that link to it, what is the sort of role AI plays there?
Yeah, I think it's interesting in the financial news space how, a lot of the websites and firms that, we work with, it's still just this massive flow of news, a lot of headlines. And, in one sense, we're all trained to kind of like try to keep up with our feeds and keep up with all of the chatter that's going on. But it can really be actually quite tiring and distracting from the relevant, the most salient information. And so the promise of AI, and that's where our TC Labs group out of Nice is really working on these problems, is how can we allow technology to do a lot of the reading for you, and so that I can wake up each morning and look at, okay, what do I need to read today? And, avoid a lot of the duplication and, help see some of the overall topics and sentiment about those topics, so I can move through that news flow more efficiently, and it can be a lot more useful in the financial space to my trading. And so that's where, those are some of the problems that we're working on, that only AI could help us with.
Yeah, no, that's fascinating. And Guillaume, I know another way that you guys have sort of talked quite a bit about engaging the users and sort of keeping that engagement up is through your education piece. I mean, could you sort of let us know a bit more about that?
Yeah, of course. So I think there are two really important parts for our clients, so new joiners and more experienced traders. So first, education, and then market analysis. So regarding the education part, even if we get more and more experience and more trained clients, we still get many beginners and newbies. So we need to set up full educational programs and in different languages because we're covering more than 150 countries. So basically, it's just about the basics regarding how the CFD works, what about the financial markets, how to analyze them in terms of technical analysis, macroeconomics, and also setting trading strategies. So we launched basic webinars covering these topics in order to invite all of our new clients worldwide to attend to that kind of educational program. Then also we have many video tutorials on the platform in order for clients to be able to get the best start, how to find a product, how to place a limit or stop order to enter the market, how to set up your stop loss and take profit, that kind of thing, in order, for clients not to wait for someone from Capital to call them or to contact us before they can, place their first trade on the account. I think that also demo accounts are really important. We have demo accounts replicated the real trading conditions, and I think this is mandatory steps for clients before trading on a real account in order to practice under real trading conditions. And usually our clients stay between a week and 2 or 3 months on the demo account before going on the real account. And sometimes in order to test new strategies, new products, they're using both real account and demo account. So I think it's really important to get to that step. And also we have a dedicated app which is called InvestMate, really well ranked and noted on all Android and App Store. Basically, clients through this app could learn the easy way and with simple informations and definitions about how to trade financial markets, what will be the impact of that release on an index or on a commodity, how to get the best start with technical analysis, that kind of thing. So I really encourage people to look at that app, and this is a kind of tool we give access for free to all of our clients. And in order to do some more advanced things, but this is more offline. We'll also do some seminars for advanced traders on dedicated topics. So yes, this is a full range of educational program we give access our clients to, because yes, we are an online broker. Our core business is to give access to financial markets through a unique platform, but we also have to make sure that our clients are educated and get the research and market analysis content they need to in order to take the best decisions.
I think you bring up a good point about the level of investment that you're making in webinars and tutorials. I mean, I've seen the investor satisfaction statistics, and just teaching people how to use the platform is like one of the biggest boosters in customer satisfaction rates. I mean, some of the tricks around how do you make sure that people are exposed to that content. And so we're starting to see, once again, more convergence, if you will, between the educational material and the platforms itself. And so whether you're talking about as literal as, in our technical insight product, when you're looking at a chart and you can see a double bottom pattern forming, and we explain what a double bottom pattern is in that moment, for example, so you can get that embedded, or just making an offer for how to place an order ticket or an order, for example, within that workflow, within the apps. These things are often separate, and so starting to pull them together to make sure that people encounter these things is important. And of course, disseminating on social. We've found that over the years, our clients are so fixated on publishing their commission rates and general messaging in social and advertising. And we're working with a lot of them to make sure that we facilitate awareness about the investment research tools that are available to help them place an order. So not only how to use the order ticket, but how might you get the analysis you need to be able to fill out that take profit level box, so things like that. And so I love this idea of like the education, not only teaching general information that you can apply with any firm, but how do you teach people in a way that helps them habitually use your own platform. So I think pulling those together is effective. I mean, we've seen it; it's effective.
No, I think that's really, really interesting. I think you're completely right. I love the simplicity of the idea of just showing someone how it works, being a key thing. Sometimes the things that are right in front of you are the things that we miss. I'm just going to take a couple of questions. The first question that I've had come through is, I think it's one for you, Catherine. It's you sort of talked about premium analytics. Are you getting new data requests, sort of new types of data that people are asking for as they sort of become more data hungry, I guess?
Absolutely. Actually, it's interesting. We just launched this new product over the weekend called Strategy Builder. It's actually a rebuild of a product that we've had for a while, but we've redesigned it for, like, let's say, the latest consumer expectations on workflow and ergonomics when using things, that progressive experience, if you will. And one of the things that we learned in doing the user research for that project was just how important very specific data points were. I mean, we had people notice when, like, hey, you removed beta, like, and I like that data point, right? Or they've just come off of a, David Jones session and they've learned about MACD, or they've learned about, debt to equity in some book they're reading, and they want to be able to find and leverage technology to do more of what they've learned about. And so, for example, we have this strategy builder product that is basically a screener. I mean, you can go in and build a strategy on, like, how do I want to choose my investments? Maybe I want stocks that are doing really great in terms of revenue and earnings. So we want to float those to the top and maybe also apply a MACD to that, something with some sort of technical signal. And what we found to enhance that product is that we needed to start expanding the data points to capture quite precisely the data that people are interested in, and then really work on our search capabilities. How do you allow people to come in and, even in a screener, search for what they're looking for? Like, you not only search for dividends in a screener, but maybe search for Tesla. And, how is Tesla ranking in terms of revenue and earnings, or in terms of a price performance strategy? So yeah, we've seen a lot of our user research pointing to the need to be very specific and esoteric in terms of the data that we're offering. And then I would say in some of our classical products that people know us well for around technical analysis is, even among the big stockbrokers in the US, for example, that we've served for many years, analyzing daily and weekly charts, they're really acknowledging need and interest in more high frequency analysis like we do in the Forex space. So looking at launching intraday chart patterns and technical analysis for stockbrokers, as well as, we've had that for FX for quite some time. So that's really sort of addressing the activity that we've seen from this, unique world circumstances, where we see this massive uptick in people using active trader platforms, even at the stockbrokers, and they're not the typical persona of people that have been using them. So we want higher frequency, we want more esoteric data, but delivered in a way where people can kind of like jump in on their interests and then learn a little bit as they go and satisfy that appetite for learning. I love what the CEO of Doe in the US calls it, like, his following is people who want an active financial lifestyle the same way that somebody might pursue an active athletic lifestyle. So really honoring that keen interest in specific rich data.
Yeah, I quite like that.
Actually, I should mention the partnership that we have with Refinitiv, right? Because I think the quality of the data is something that matters in the delivery. People notice the quality of the data and what you're delivering, and so particularly in our news product line, we needed to make sure that we had offerings that were not just kind of scouring the web at large for news topics, but really focus on premium quality content. And that's where pulling in Refinitiv through our Market Buzz products, our AI products, has been really important to us.
Yeah, I think that's an important thing, is that there's sort of getting hold of more data, but also making sure that the data you get hold of is good and relevant. And that's completely where it fits in. Another question
in computer
is,
science, we called it garbage in, garbage out. So
yes. Well, yeah, the removing infobesity is another favorite of mine. But And another question we've had is around using AI with ESG. I think the question is saying that there's a lot of subjectivity inherent in what we consider responsible investing. So how is AI efficiently calibrating ESG to ascertain what's material and what isn't? I guess ESG is a big topic at the moment, but it is true that they're very... it is a very subjective matter. So how are we using AI to sort of decide what is and what isn't relevant in terms of ESG disclosures?
Is that one for me again, or I feel like I've been talking too much?
No, I think.
I know with our AI product line, you know, people love transparency, real data, real facts, and I think that the work that we're doing in applying AI to news feeds like Refinitiv and what's being talked about on the public web, is going to provide an alternative to the formal ESG rankings, for example. So we have another source to sort of almost like a check and balance on the truth about how companies and industries are behaving. And so while we may have certainly formal and expensive sources of ESG data, we can pair that with kind of the chatter and the information that's being discussed online and applying AI to assess that and to provide an ESG point of view as well. So that's I would say the area that's most relevant to Trading Central in terms of work in ESG.
And actually, I'd be quite interested to get Guillaume's perspective, because obviously a lot of their traders won't necessarily be looking purely at equities, which is where we see ESG is more prevalent, and also where we have sort of more short-term based investing. Yet again, you're not necessarily investing in a company to sort of have a positive impact. You're investing to make that sort of quick money and sort of getting in and out. So I wouldn't see ESG as quite such a big subject matter in this area, but I'd be interested in your view, Guillaume, because obviously ESG is something that a lot of people are talking about. So is it something you guys are getting many requests for?
More and more, to be honest, but it's true that it becomes, and especially since last year, a topic clients want to be educated on, or to get information on, and maybe to invest on ESG friendly equities. But basically, no. Compared to TC, we don't have that much interest right now. Maybe some particular ones from time to time when any big news or release for that particular company or that company, but not that much, to be honest. And the AI part we have internally is more about trading behaviors from our clients linked to their investments in order to identify trade bias and to help them trade better. So it's slightly different than TC's activity when they release news or feeds linked to that kind of matter. But yes, to answer your question, we have more and more requests about that kind of thing, and I think this should be a way, and maybe we'll develop more products like baskets linked to companies ESG friendly. But right now, this is not the highest priority, I would say, from our active clients.
Okay, no, thanks a lot. Well, in terms of the questions, I think that's all of the questions that we had, and I've just realised we've overrun by 5 minutes already. So, but enjoying it too much. But thanks a lot. Do David, Catherine, Guillaume? Do any of you have any remarks before we sort of close off? Anything that you'd have liked to talk about that we didn't manage to cover yet?
No, I'm happy.
Well, then,
I mean, I would say just in terms of, just some pointers that might be useful for the people on the line is people know us well for our embeddable apps. And so, for example, pulling in our analyst views or our market buzz or our economic calendar or technical insight, for example, But one of the areas that we're working most closely with people, besides just licensing an embeddable app, is on that sort of care we talked about that moving people through from something they've discovered in the public or social realms into something more premium behind a login space, for example, and reducing the friction even from there into an order ticket or managing their portfolio. And so one of the screens I was pulling up earlier was of a mobile app with sort of almost like a feed coming in of, in this case, stocks that you have a financial position in. And we're really trying to leverage those moments to more proactively push people information about their account holdings, about the assets that they have positions in, and using that as a jumping off point. And to do that well, it really draws attention to some of the API capabilities that we're offering. I mean, we just proactively did this little project for our clients where we had a lot of attention in our charts, and we used our own APIs to deliver a little slice of, how does this stock rank in terms of a strategy, a performance strategy or revenue and earnings strategy. And if it ranks number 13 out of 74, you're kind of curious what number 1 is. And so we were using APIs to pull people from a technical analysis viewpoint over to a screening viewpoint. A very small piece of work that wouldn't be possible without APIs and without a lot of thoughtful deliberation around that sort of journey and being helpful in a moment. And we saw 20% uptick in the adoption of screener usage at those clients. And so it's just very interesting, the impact of small moments, those little micro moments on adopting really useful products. So we have to be wary of if a service that we're offering doesn't have great adoption, is it because it's not useful, or is it because people aren't discovering it or in the moment that it can be helpful to them? So just a small pointer there around some of the APIs and user experience work that we help clients with.
No, it's a good pointer. Thanks. And we've actually had a follow-up to the ESG question. I think this one is more for Gillian, but feel free to jump in. So it's ESG, the differentiation between ESG and impact investing, they're not the same. So do you differentiate how ESG affects a financial risk versus how it affects operations in the outside world?
Is this one for me, or because I think
it's
maybe David. I'm opting out of that one.
Yeah, it's a bit of a.
Although I'd love to connect whoever it is to someone in our company from our analyst desk or from TC Labs that's actually working on ESG.
I think from a trading point of view, I don't think it's that much of an impact. I think it's, as Guillaume said, from a trading point of view. I think people, when they're trading, I think particularly maybe the casual trader, they just want stuff that's moving. If you look at something like Bitcoin, Bitcoin's moved 400% since the March lows. So more older traders like me would think that, well, that's a crazy market. But there's a whole bunch of new traders who love that sort of stuff. So I don't think the ESG considerations are that high. I think when it comes to trading, I think they want action. I think, and they're not really, maybe not too concerned where it happens.
No, that's
one of our more popular screens that people search for is abnormal volume. So makes sense.
Yeah. Well, no, thanks so much to the three of you for taking the time today, and to everyone that's joined. I think it was really, really interesting, and it is a fascinating time. And I think, to go back to David's original point, a lot more excitement to come next year, probably. Just a quick reminder, I'm going to do a quick plug. We do have a third part next week, which will be focused more on the long-term investing. So there'll probably be more on ESG then as well. But yeah, thanks a lot for tuning in. And as I said, we'll be sending the recording. So yeah, this is the end of the webinar. Thank you.
Thanks very much.
Thank you.
Thanks for having us.